Hey everyone, Coach Investor back to another video for today. So, is PayPal at $63 a no-brainer? We're going to discuss PayPal, the pros and the cons of maybe opening up a position right now. I know a lot of you have a position in PayPal. Do share your opinion down in the comments below. What have you been doing with your shares? Have you been adding, selling? Let me know down in the comments below. But as you can see on the graph right here, the stock hasn't really been doing much in the last couple of weeks. Yes, it's up from what, 57 to now 63, but not much. We've had that huge red candle when the earnings came out, which in my opinion were better than expected. They actually raised guidance for the full year, so there is that. Now currently we are still waiting. We're still waiting to hear who the new CEO of the company is going to be. They had a meeting a couple of days ago. Nothing was mentioned with regards to the search for the new CEO. We haven't gotten any hints, nothing, which is a bit disappointing. Hopefully we'll get more news in the future, because I do think that this is going to be crucial for the future performance of this company and this stock, because as you will see, it basically has been doing nothing since September of 2017. Of course, that was the stock's performance, but if you look at the business performance, of course, the business became better throughout the year. Maybe better is not the word I should use, but it has become bigger over the years. Now, last quarter, if you look at the GAAP and non-GAAP numbers, let's look at non-GAAP, for example, net revenues grew 9 to 10%, operating margin up 201 basis points year over year, net income increased 28%, earnings per diluted share increased 33% year over year, then free cash flow of $1 billion. That's actually down 3% year over year. But they said here during the earnings call for the full year, they continue to expect to generate approximately $5 billion in free cash flow and to repurchase roughly $4 billion of their shares. Remember, we've talked in the Alibaba video yesterday, if you want to watch, that's going to be in the top right corner, the power of buying back your own shares. In case your company is not growing as much, your stock price isn't really moving much, buying back shares is actually one of the ways to return a lot of value to shareholders. I'll pull up this slide again. They also say here that for the second quarter, they expect revenue to grow approximately 7.5 to 8% on a currency neutral basis and 6.5 to 7% at spot. Then for the full year, given the earnings outperformance in the first quarter, they are raising the outlook. They now expect non-GAAP earnings per share to grow 20% to approximately $4.95, an increase of 2 points of growth from the guidance they gave us in February. Now the CEO says here, assuming that current macro conditions continue, they expect back half revenue growth to be roughly in line with their performance in the first half of the year. Additionally, based on the expected contribution of unbranded processing volumes to our growth, we now expect at least 100 basis points of operating margin in 2023. Now, with regards to unbranded processing, we're going to touch on that later on. Now, purely looking at valuation, by the way, right now, company has a market cap of $71 billion, forward PE of 12.4 times. Year to date, I believe the stock is down 10%. In the last 3 months, it's down 13%. And since last year, it's down close to 20%. But valuation-wise here, price to free cash flow, EV to EBIT, EV to gross profit, I think it's the lowest it has been in a long time, if not ever. Of course, you will say there are reasons why a company like PayPal is trading at a much lower valuation than we're used to, because growth has been slowing down, they're losing market share, etc., etc. When talking about losing market share, I'm talking about the likes of Apple Pay and Google Pay. I mean, we know this for a fact. On mobile, for example, Apple Pay is taking a lot of market share, Google Pay as well. But PayPal is working on that. Remember, PayPal also owns Venmo, and Venmo has been growing quite fast lately. As they mentioned in the last earnings call, Venmo continues to grow its revenue by double digits, and they're pleased to see its TPV accelerate 550 basis points from Q4 to $63 billion. Now, of course, there's still a lot of work to do with regards to Venmo. I think they can create a super app with Venmo, but again, execution is key. Now, of course, when we talk about Apple Pay, you also have to know that Apple Pay in the backend is using Braintree, last time I checked. But with the rise of Braintree, which has been growing faster than the other parts of the business, margins have been coming down because Braintree is much lower margins than obviously PayPal's bread and butter, the checkout button, the branded checkout. But there is also a reason why they're going now to small to medium-sized businesses, because that segment has higher margins than enterprises. Now, before I continue, if you enjoy this type of videos, leave it a thumbs up, subscribe. If you have not, would really appreciate that. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Now, I recently asked on Twitter, why shouldn't someone buy PayPal at current prices? And one of the comments was, well, who uses PayPal, LOL? Well, if you look at this slide right here, which came from the shareholder meeting, over 400 million active consumer accounts, 35 million merchants accounts, $1.4 trillion in TPV, and 23 billion payment transactions. That's the scale. They reach over 200 global markets, 150 cent currencies, and 25 hold currencies. So safe to say a lot of people are still using PayPal. And then here on the right, the trust. This is a big thing to take into consideration. Of course, me, you, the guy in the street can all come up with a checkout option, with a checkout button. But if you go on an e-commerce website and you see PayPal and then you see something that you have never seen before, who will you go with? The trusted PayPal button or the unknown other button? I think trust here is underappreciated. If you're talking about money, if you're talking about transactions, I think trust is a big thing, and PayPal certainly has that. Now, when it comes to the diversified portfolio, they have it as well. They have wallet and commerce, network. This comes under the consumer value proposition. So these are the things that you usually use PayPal for. Buy now, pay later, that has been added, but P2P, friends and family, goods and services, debit and credit, crypto, etc., etc. But then you have this one right here, more for the merchants, the payment service provider, or PSP. And these are just a couple of examples here. So they are taking share as a PSP. They've landed significant deals while bidding against competition. So large enterprises in the United States, Uber, BetMGM, for example. Then in Europe, Booking.com, Spotify, large enterprises in Brazil and Mexico, Didi, 99, the others two, I don't know who that is. Then channel partners, they have Shopify, Wix, WooCommerce, and then small to medium-sized businesses. This is just starting off, well, not just, but it's still a small part of the business. Expect this to grow. And continuing on that, in the earnings call, they say here they're focused on substantially improving the margin structure of the unbranded business. Their PayPal Complete Payment Platform, or PPCP, opens a new $750 billion total addressable market in the small and mid-sized business market, with a significantly enhanced margin structure compared with the largest enterprise customers, as I mentioned before. The Braintree and PayPal Complete Payments platform are also expanding overseas, where we can drive higher margins. So there are still segments of PayPal's business that is and will be growing faster than, let's call it, the legacy side of things. But of course, this is hurting currently the margins of the overall business. Now, with all that said, there are still some risks to it. There's still a risk that PayPal as a brand is slowing down and will be slowing down for the foreseeable future. Maybe execution won't be as expected. We don't know who the new CEO will be, because they will be replacing Dan Schulman later this year. We don't know who that's going to be, what ideas he's going to bring in. Is he capable of accelerating Venmo's adoption? Is he capable of accelerating PayPal's business as a whole? Remains to be seen. But currently, we can also say that PayPal is a tremendous business. Free cash flow $5 billion, buying back shares $4 billion worth of it. I mean, it has significant cash on hand. It's still a growing business, although not as fast as before. It is still growing. Margins should become much better as we move forward as well. So it is a balance of risk reward here. In my opinion, the risk is not as big as the reward at the current prices. Of course, if there is a lack of execution, then it's not even worth buying at $63, even though valuation has never been lower with current metrics. And so that would be it for this video. Of course, do share your thoughts down in the comments below, their bad and the good things. Let me know down in the comments. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.